Hello, Maverick traders, and welcome out to your currency recap. This is Ankit here, and let's begin our market coverage. It's a Thursday, December the 7th. Let's get into it. Let's talk about what's really moving in the markets, take a look at a broad down analysis, taking a look at our currency baskets, and talk about the opportunities ahead in the next 24 hours. Now, let's get into it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So looking at the market analysis overall, again, here we are. Markets, again, remains pretty strong. So the headlines remains the same. We are in this historically seasonal period where markets are stronger than weaker. So that's exactly what we're seeing. We also had a bigger surprise last night. We had a big move in Japanese yen, and I got a lot of emails for it. That was something unexpected. So usually, whenever there's an expected announcement or unexpected news, that creates the biggest move. So this was the biggest move in the Japanese yen since January 2023. And even if you take a look at the Japanese markets, the equity markets had a nice drop as well. So is this just a rumor? Is this something more substantial? We'll find out. Again, but for right now, there was some news that the Bank of Japan is hinting at the ending of their policy, or there's traders taking a bets on Bank of Japan ending their policy. So there's a lot going on there. So this is this initial move. We'll find out what kind of follow through we get from here. Now, taking a look at the movement today, again, the Japanese yen really took the stage here with a 2% gain. Outside of that, everything was in between a 0.5% range. The Canadian dollar was down 0.74. And the Swiss franc was down 0.74, and so is the dollar. So one thing I do want to highlight is that it's just not the dollar that's weakening. It's everything against the yen. The Aussie is the only one that kind of just stood out a little bit at 0.25%. Key was mostly flat. So unlike last year where the dollar just got beaten hard and everything else kind of rose against it, it's not the same case. There's a lot of things that are looking weak here. So we really had to keep our options open. Now, looking at the broader market, so this is where whatever happened in the Japanese market, taking a look at the US market, S&P up 0.8%. We also have the VTs, the World Stock Index, up 0.67%, and crypto again continues to rise at 1.6%. So overall, we are seeing the same momentum continuing. Oil was stronger and gold was relatively stronger. But again, we have seen the metals, we have seen the oil kind of pulling back a little bit here. But overall, the broader markets looks pretty strong. So this is where do we stand in our outlook? And in our outlook, we do still stand at a +2 because we are still at a +2 in the markets above the 20, above the 50, and the market outlook overall looks pretty good. So now let's take a look at the chart here. So again, the chart looks bullish to you. It's just high basing a bit right now. So right now, everything's sort of pointing out to an upside, then the downside. Now, if we jump into the currency world, we have seen a lot of sort of different things. And this is where it's just not following the traditional risk off versus risk on sentiment. I mean, other than yesterday, the dollar was actually doing well, even though we are seeing the equity markets pretty strong. So again, there's a lot of mixture of things that are happening, and you just really have to pay attention to relative strength weakness rather than a traditional risk on or risk off. You can see that we are in this period where no central bank is sort of raising rates. RBA held rates, Bank of Canada held rates, and we also had a surprise number on Tuesday, the Joel's job openings down to 8.73 million versus 9.31. So that was a big surprise there. So tomorrow we'll see what the jobs report says. The ADP numbers on Wednesday came out lower than expected. And remember, this is where we're talking about the growth in the economy or how strong the economy is. The employment report, we really need to see that employment report sort of go up. That's where we see a risk-off environment. But right now, I think we're seeing the markets sort of rising on all positive news here. So we'll see what happens tomorrow. We'll be covering it live. We'll be taking a look at the dollar crosses. So that will be something we'll focus on tomorrow. But for now, let's do our currency analysis and take a look at what's strong versus weak. And this is exactly what I was referring to. Look at the -2. Dollar, Swiss franc, euro, CAD, pound. So it's just not a dollar story. And this is why I want everyone to be broaden the horizon and look at everything against the currencies. So right now, just not the dollar story. It's a pretty spread out. The Aussie and the Kiwi, they're holding a little better. But again, I would have loved to see those currencies sort of rising more, but they're not. So this is why focus on relative center weakness. As we go into tomorrow, we have to take a look at what happened with yen. I would expect the yen sort of pull back a little bit after that big move today. We'll find out if there's any sort of continuation from it. Remember, initial move is not going to met with the follow through. Sometimes we get these pops and they sort of fade away. We need to see a pop, holds in that level, and sort of continue on from there. So that'll be a game plan for going to next week. But for tomorrow, I will be primarily looking at dollar against the yen, also taking a look at dollar against the Aussie and the Kiwi. So let's take a look at possible trades ahead based on what we just looked at and talk about what looks the best on technical basis.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader?
So taking a look at the chart here, you can see that we had a massive move in the yen. This is the daily chart. Let's bring it down to a lower time frame. We can see that we're just pulling back a little bit here. It's really risky to go long at this point because we have such a far away from the support and the resistance level right here. So there's quite a bit of distance here. But like I said, I would rather wait and look for follow through. A lot of times these movements sort of follow through or they just sort of reverse. I'm really interested to see what happens with the yen here. You can see how deeply oversold level it was. And look at the big bar that came on today. That was the biggest bar since January 2023. And going back to December, that's when the Bank of Japan meeting happened. And there was a big move in that yen as well. So yen goes on a watch list. Let's take a look at other areas of the markets. Remember, we've been talking about bond markets. Let's see what the bond markets is telling us. And let's go into the bond markets. So the bond markets overall, you can see we are pulling back. And the interesting thing is that we are seeing similar thing what we saw last year. I mean, going back to last year, you see this period where we saw a very similar thing in this range here, right here. And fast forward, we're seeing the exact same thing here. So we're not really seeing any sort of change. I'm seeing a more repetitive behavior in the markets. So I would expect, take a look at what happened back then. We saw a bit of a rally in the bond yields in the middle of the month. But last year, the big story was in the dollar. Remember how dollar week it was. We got that big move down right over here. And we just continued to move down for the remainder part of the year. This was a very bearish price action. And I want everyone to sort of compare and take a look at where we are right now. So where we are right now, dollar is weakening, but it's not as weak as it looks last year. So right now, we have a bit of a range in place. I would rather look for a break of these levels before I can go long or short. I know some traders have a much more weaker outlook on the dollar, but if you just take a look at the dollar here, dollar is sort of consolidating here. It's not a great buy or it's a great sell when it's consolidating like this. So let's take a look at what else we can find. So tomorrow, dollar is going to be the big focus, either a break of support or a break of resistance. In that case, we can start to pair against, let's say what the Japanese yen is. Japanese yen, let's just leave it alone for now. We don't know what's going to happen overnight. We had a big move in the Swiss franc. We can look at pairings there as well. I know some traders were questioning about the euro dollar. And if you take a look at euro dollar, what do you see on a euro dollar is a bit of a pullback on a daily chart. This is a buying opportunity. Well, this is where I would like you to take a look at the euro currency basket. And if you take a look at euro currency basket, you notice that euro is way more weaker than you want it to be, especially pairing against the euro dollar long. So this is again sitting at a support right here. So at this point, maybe some small bounces here, but I think the euro is not looking as good for the long side. So a lot of the European currencies, even the British pound, take a look at British pound. We broke that momentum, we pulled back, we had a bit of a rally. Now this is pulling back. So if I need to go long dollar, I will do that against the pound, do that against the euro, and do that against the Swiss franc. It's pretty clear where the relative strength and weakness is. I mean, technically, none of them looks the best, but when we take a look at tomorrow, we're going to be taking a look at shorter term chart. So just looking for an initial move and just get out by the end of the day. That's just the game plan for Friday news trading. But outside of that, I mean, take a look at the best longs. I mean, they're not really the best long. Aussie, they're still holding in here. I mean, it's not looking the best. It's not looking the weakest. And so is the Kiwi. And that's why this year it's a lot different than last year. Last year, if you go back, we had a massive move in this Kiwi in the last November and December of the year. We're not really seeing any of those rallies. So I think this is why you need to be more open than not to look at different case scenarios for different currencies and not be just so married to a dollar short outlook. Now, dollar yen had a big move. No doubt about it. We are down to a 144. I wouldn't be surprised that we see a bit of a shorter term rally to the upside. I do not want to just pick up a short here on the dollar yen. I mean, take a look at this flash crash we had earlier today down to 141. Now it's at 144. I don't want to touch it right now, either on the long side or on the short side. I mean, maybe on the long side, we have a tight stop. I don't want to pick up as a short right now because, again, we don't know what kind of follow through we're going to get overnight. So I'm not looking to enter any new trades overnight. And the idea is just to come back tomorrow morning, take a look at the US payrolls report, make a trade on that, enter and exit, and be done for the day. That's the game plan. Again, this is the market. You really need to know when there's energy in the markets. You want to trade when there's an energy. Outside of that, stay in cash. We are also in this historical period where volatility usually tends lower. So if you're looking for volatility, maybe not the best time. But there will be pockets where you get some good opportunity. But you really have to be clear on the holding period for those trades. Thanks for joining. We'll see you guys tomorrow early morning for the US payrolls report. Thanks, everyone. Good night.